Hello guys, this is BinaryOptions.com, the 4-hour chart on the euro and Canadian dollar. Like the name suggests, we are looking at the classical definition of a Elliott wave move. We are looking at 5 waves down correcting with 5 waves up correcting with 3 waves down. So the very definition Elliott stated so long ago is on the screens here on the 4-hour chart. Because of that, looking for prices to break higher, and we want to buy calls with end of week expiration date. The reason for that is the fact that, as you can see, starting from the lows here, this is a contracting triangle here. Let me try to show you the contracting triangle that starts here. So this is A, B, C, D, and E, most likely to be done here, and this is where the contracting triangle ends. So A, B, C, D, E, most likely here. And by the time this contracting triangle ends, it means that the move to the upside starts from this moment. Well, from this very moment, we are looking at a 5-wave structure. Let's try to label the 5 waves. So 1, and then the 2 here, or the second wave, the first wave, the second wave, then of course the third wave, 1, 2, 3, I would say is all the way to the upside here. In any impulsive move, this is an impulsive move, you need to have at least one wave that is extended. This one seems to be extended fairly enough, more than 161.8 out of the previous wave. So 1, 2, 3, 4, and 5, I would say that the 5th level ended here. And there you go, you have 1, 2, 3, 4, 5 waves to the upside, and now this should be corrected with 3 waves to the downside. Well, I would say that this is only wave A out of this move here, A. Corrected with a B. As you can see, the B wave there with the highs makes a new high when compared with the previous high in the 5th wave, and that means that we are looking at a flat or a possible flat here, and this move ends with the C wave, the downside A, B, C, and there you go. We are looking now for the second correction to be done here, and we are looking now for price to go and make a new high when compared with the previous one. Of course that it already did, but now we are looking for a 1 and 2 and the possible third wave to the upside to go and reach a 161.8. So normally in terms of Elliott waves, this should be labeled as either a first wave here of a bigger degree, and now we're looking for a second wave here, and then of course the third wave should come to the upside in quite an aggressive move. Now normally I would tend to look for buying calls out of this outcome, and this buying call should come by the time this trend line is going to be broken, but I would also buy it for end of week or even end of month. I would go with the euro and Canadian dollar. So let's just go here and say that this is our strategy for the week. Quite an important week for Canada, this one, for the Canadian dollar, because we are having the Bank of Canada and also the non-farm payrolls, and the Canadian dollar travels a lot on this outcome. So buying calls with end of week or end of month expiration date. Of course, whenever you are buying calls, you are looking for price to be bigger than the striking price at the expiration date, and this is what we are looking for, as we are quite bullish on this outcome. Remember, classical Elliott waves analysis here: 5 waves up corrected with 3 waves down, and now we're looking for price to go and make a new high. Normally also this one here resembles with a triangular formation that should be a bullish one, should break higher. So it remains to be seen what the market will actually do in the end. That being the case, this is what I wanted to show you for today. Keep in mind this is fairbinaryoptions.com, and all these analyses are possible due to our generous sponsor here, Lion Eye. Until next time, stay safe on the markets. Bye bye.